Good afternoon, everyone. I am Laz. I'm here to do the daily recap, filling in for Scott this afternoon. I want to take you through just general indexes. We're going to look at what some of the broader markets are doing, both in the immediate term, short term, as well as a little bit of more macro look, as well as a couple of individual stocks, some notable standouts and some definitive laggards. So we can kind of look at the seesaw here a little bit, look at the strong as well as some of the weaker ones. Just get a general sense of what's happening. And again, as I always tell traders in the Active Trader course, you have to go into every day with a plan. You have to look at different time frames. You have to gauge strength. You have to be, as an astute trader, almost a human filter. You have to be able to process data and make decisions about risk. So that's ultimately, when I do the recap or whenever I do from time to time the morning call, I'm really focused on both short-term risk and bigger picture, so I can kind of get a sense of how I like to trade the market and how others I think should view the markets in terms of risk. And again, not all traders are created equal. Some of the day traders are focused on some of the smaller trends, and some swing traders focused on the more intermediate to longer term trends. So let's take a look at both here. We're going to start obviously with the market. We're going to look at the S&Ps. We'll look at the spiders. One of the ETFs that I consistently track and look at, and there's not much to say here that we haven't already said. This uptrend continues to be paramount here. From literally January 2nd, we have seen less than a handful of pullbacks. So it's what we call the melt up trade. And this trade is still very much intact. We did see some selling yesterday. It probably scared some of the longs out of their positions, not to be surprised. And then today right back at it with another gap up. And primarily what we've seen here is a series of gap ups that create either short-term rallies or short covering or what have you. We're gonna kind of mark off this upper range here. This is our 3-day high, today's high, as well as the high from I guess it was Friday of last week. I want to keep an eye on that upper level. Here's a 60-minute chart, just to kind of put it a little more granular, a little more detail. Yesterday we saw a gap down that basically traded and hovered on its lows for the better part of the day, only to then gap up again today and trade right back to prior highs. So the end of the day got a little whipsaw. You can see if we go even smaller time frame, the end of the day we hit into that prior high and then turn down. So we'll see what tomorrow brings us. I think right now you got to have a very short-term approach to this market, if not even a 1-day to 3-day time horizon, in my opinion, as the market's getting a little volatile and a little choppy up here. If you miss this rally or you've missed this move since the beginning of the year, give this market a chance to maybe pull back, correct a little bit, or develop some longer-term basing pattern up here that again, like I said, longer term will probably happen over a series of multi-day, if not multi-week. So give this market a chance to at least contract if you are looking to put money to work or participate. You don't want to be the trader buying highs and chasing, because that trader by and large will never make any money ever. So short-term roadmap, we have some ebbs and flows in here. Like I said, go back to that 60-minute, some ebbs and flows in here. Been a very, very tougher, been a much tougher trade here for some of the shorter term players. Is, one day is not really leading to any indicator of what should happen next or what could happen next. Today, I think caught some traders by surprise, I should say, as I think traders were looking for maybe a little follow through to yesterday's, drawdown. Nevertheless, right back at highs. Let's see how this develops over the next couple of days. Like I said, I think shorter term expectations are probably a smarter approach here than anything longer term. Let's take a look at really what's driving this market, because you have a strong market. Let's take a look at banks, and I'm going to start with Goldman. Banks have been the key here. Banks continue to be the key. So go banks, so go this market, in my opinion. Really the only, not the only, but one of the more predominant drivers here. And Goldman, again, new highs today, holding this 8 EMA. Every pullback has been bought, even this 1-day pullback. Bought again. JP Morgan, very similar, breaking out. JP Morgan again, don't be chasing highs, but there's definitely some momentum starting to set in here. FAZ's a good proxy there, or sorry, FAS, a good proxy there for financials as well. If you're looking for a good ETF, again, been very reflective of the general, move that we've seen in some of the larger banks. Citigroup, one that I'm keeping an eye on, obviously, trying to break out of this range. Keep an eye on Citigroup for any follow through, but a trade above this upper range here around 43.25 probably could lead to some short-term gains here for those so inclined. Again, nice consolidation of price up here, and Citigroup looking like it's just waiting to push higher. Bank of America, we saw a nice break out of that lower level today. So banks are really where money flow is, depending on how you see this, right? So, Bank of America pushing higher today. So keep an eye on Bank of America for potential new highs here, as all signs point to higher prices with all these banks. So that really is where money flow is, and that's driving this market and holding this market at these levels. And until something changes with these banks, I suspect that the two are the S&Ps and some of these banks are going to mirror themselves pretty closely. That being said, let's take a look at something that shockingly, it hasn't really participated. That's Apple. And we've talked about Apple countless times. Breaking down from this upper area on earnings. Earnings since the earnings announcement, you saw that 1 or 2 day follow through, and it's been a very choppy, very difficult type of trade down here. You can see, failing yesterday and then coming right back today. So catching a lot of traders by surprise here. What I think is happening here is, the stock's probably trying to find, a little bit of a bounce. This is actually the first, higher low, technically, that we've seen. Again, we saw a low here, little bit of a higher low. We popped, we pulled back, a little bit of a higher low as it is right now. Again, we have to respect this lower pivot here. It's about 442. But again, I haven't seen a higher high yet. So a break of this upper pivot here, this is about 462.5. A little bit of a break of that level. We could see, a little bit of a, snapback start to build here over the next couple of days, or even couple of weeks. I think there's room to go higher. There's room up to the 21, and there's room even into, this resistance zone, however you want to look at it, up to the 500, even 520 mark. I don't think is out of the cards. If we look at a higher time frame, here's a weekly. Again, a trade back to 500 or even 520, 530 probably shouldn't be all that much of a surprise. I wouldn't say one day makes a trend. Again, we have one up day. That certainly doesn't mean that this structure has changed, but something to watch. A higher low for those that have been chomping at the bit to buy this stock. Again, keep an eye on some of this short-term structure. You have, using just follow the money trail down, up, pivots, fails to make a new low here. If we turn up from this level, it could tell you in the short term that the stock is starting to gain some traction from this lower range. Again, like I said, I would take this trade ever so cautiously. We haven't confirmed anything. We haven't taken out 462 and a half. But if we do, that to me would be an indicator that something potentially is changing here, and we would then look for some sort of opportunity to enter the stock on any short-term pullback from there. So just a short-term roadmap here in Apple. I know there's a lot of eyeballs there. BlackBerry, BBRY, and to be quite honest, I'm so not used to saying BBRY. The stock's been research in motion for forever and a day, so I keep forgetting the new symbol here. But BlackBerry, it's become pretty wide and loose. What do I mean by wide and loose? Large price movements, intraday, large, ranges. We saw a swing from 18 down to 12, back to 17. Volatile. There's volatility in here. And again, I think the short-term plan here has to be for short-term day trades only at this point. If we look at a weekly, again, you can see we saw that pop to, in RIM to about 18, pulled back pretty hard to 12. It wouldn't surprise me if we saw a couple weeks of contraction in here before we got a clearer picture of what potentially will come next. So if you're looking at BlackBerry for a trade, I would stay with a very short-term roadmap. Looks like we put in a little bit of a topping tail. We got a nice retracement in here from that pivot high, little 786 retracement. Again, we could see a little short-term pullback here. So for those that are looking at this symbol, again, stay with a very short-term strategic approach there. Gold. Looking at this precious metal, Precious, not the ideal word here, as there's really nothing precious about this chart. Still in this, declining, descending channel pattern. But moreover than the pattern itself, there's just no buyers here. There's just no interest. It seems to be a very muted dead trade. Now that can change on any given day, as we've seen, but price action here doesn't warrant a whole lot of risk being put to work here. I wouldn't be a buyer of the GLDs. As a matter of fact, if you look at a weekly, you could actually start to see a little bit of a drawdown, possibly this lower, this lower trend line, depending on how you map this out. This could push to another swing low here. So I would stay away from gold if I'm looking at it, probably more on the short side for those that are looking at that precious metal. But again, something to just keep an eye on here. I know there's always a lot of eyeballs in GLD, and I constantly, whether it's via Twitter or on the VTF, or even in my mentoring sessions, I always get asked about gold. So I'm giving you my best analysis. Again, it's not, there's really there's no way to objectively say there's an inflow of money here, or really an outflow. Even if I went out to a monthly chart, you can see that over the last, year to, year and a half, there really has been no, collective trend here. It's just contracting in price. Where this goes is anybody's guess. Right now, we're in the middle of this sort of macro range. We could, essentially pop up. We could break down. I think time will tell here. But again, really not much of I wouldn't put much of an emphasis on being involved with the GLDs right here, right now. Let's go back and let's take a look at another trade. IBM, interesting candlestick pattern here. And just for disclosure purposes, I am short IBM. Big topping tail off of earnings. Stock rallied on earnings, pushed up. You can see that big topping tail. We then got a 3-bar retracement, one of the setups that I love. I teach in the Active Trader course. And ultimately we got a pivot high and starting to break down. Obviously today is certainly, for the eyeballs, you can see the market closing at highs and IBM actually closing at or near low a day here. So the opportunity presents itself for those looking at IBM. There's an interesting calculated risk trade here. And IBM, one of those trades where weekly chart, into resistance up here, but nevertheless, flat 21 EMA, again, going to some concepts we teach in the Active Trader program, this could be ripe for a pullback here. So keep an eye on that one for a trade. Again, for disclosure purposes, I am short IBM as we speak. And lastly, I'm going to end up with, again, sort of a walk around Wall Street, DDD, some of these 3D printing names that have been sort of in play. We saw a big break in DDD, a little bit of a snapback occurring again, which is common. You get these large impulsive down moves. Then stocks, generally try to snap back before they even, they peter out or they resume trend. I happen to think you need to watch some retracements up here. And the reason I say that I think you need to watch these retracements is because you had a big volume breakdown. So, that's telling us that something definitively has changed here. We could see a retracement up to the 62%, about 65 and a quarter. I would keep an eye on this one, again, for a turn down, possibly, over the next couple of days. If we go up to a weekly, just one time frame up, real strong surge down. Let's see where this bounce essentially off this average comes. You might see another trade in there in the days to come. That's probably more for the shorter term traders, momentum traders. There's a lot of momentum in this name, even those in the VTF looking for actionable type of setups, as well as SSYS. Same type of setup, big impulse down and starting to snap back into these averages that are, starting to, decline or at least change. You can see these averages definitively changing here. So finding some resistance into these shorter term averages on the daily chart. So could make for an interesting trade in the next couple of sessions. Just some names I throw out there to keep an eye on if you're looking for, individual, symbol names. Again, it is a very fragmented market. It's probably, in my opinion, I've been doing this. I've been trading for the better part of the last 15 years. Excuse me. One of the most fragmented markets that I've seen, where you can't just make blanket statements. Market is strong, therefore I should be buying, and that list of names it's definitively there, but in my opinion is becoming less and less and less, or it's harder to start committing money to the long side, in my opinion. Again, if you're a macro trader and you're trading ETFs that are correlated to indexes, stay with the shorter term trends. That's where the money is, but certainly a much more fragmented trade in my opinion overall. As always, A planned trader is a profitable trader. Have a great night, and I'll talk to you tomorrow in the VTF. Take care.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.